Yo, what's up guys? Ryan's Trading here, and today we're going to be going over how to chart levels. Lots of you guys requested this video on how I do my levels and how they're set up. So today I have 10 tickers, most of them on a blank canvas, nothing drawn on it. And we're going to go over how to draw these levels and why they make sense. So first up we have Amazon. So ideally, always want to do the low of the range. This is the entire range from here to here. So 101.26, that is the low. So always put a level there since it is the low of this range. This might take extra time because Weevil doesn't really put the levels correctly. And then, of course, the top of the range, which is before the gap down. I don't know why the gap's not showing, but let's see, 130.76. So just to start it out, you can see we have 130.76 and 101.26. These are the basic levels, nothing crazy. You guys should be able to figure it out on your own. Now, for the short-term play, looks like we have an outside to top side bar. I'm not really sure what they're called, but you can see that it doesn't break yesterday's low, but it does break yesterday's high. So it's an outside bar, but to like the top. So ideally, you're just gonna put your low for like a scalp to the puts. You can do 121.26. So 121.26. Just ignore the cent difference. And then for calls, ideally you want to do the top of this, not here, because 125.5 is not 125.61. 125.61 is higher, so that's the level you're going to play for calls. And then your price target will be 128.99. And then, of course, 130.76 is the top of this range. So that's how I like to play my levels. You know, we have puts. Our price target for puts will be the next candle, which is 118.36. Is that the low, right? 118.32. My apologies. There we go. 118.32. And that'll be yellow. For me, I like doing yellow for my price target, and then 128.99. And just like that, you have your levels for Amazon. Ideally, you can also add more levels, like you have a gap here. So you can do 111.56 as a level, but it's not as clear. You can see that we're going through the levels, so it's not that good. We just bounce here and all, but it's good to play gaps and put a level there. So that's just another level you can have. But the main levels are for your call trigger and your put trigger. Your price target is yellow, and then of course the high and low of the range. So that's what I would do for Amazon. So let's get into the next stock, which is Chewy. Now Chewy, I'm just not looking at. There's not really a range here. You can see that we're on a small, not small, but we're on a huge downtrend, and now we're reversing back up to an uptrend. But you can see here that we have this like huge break on Friday, but our main level is really 45.70. And the reason for that is because we closed above, we opened above 45.70, we reached 47.49, and then we went right back down. And you can see here that this is also a good level, 42.35. So my levels for puts would be 42.35, and my call level would be 45.70, not 47.49, because once again, it went back below, and now it's retesting the put level. So this is your main level, 45.70. And then of course your price target will be the high, 47.49. And then for the puts, it will be the next candle after the level, so it would be 41.32. And then of course you can put it to the bottom of the small range, which would be 40.76 as a small level to scale if you have any runners. So nothing crazy with Chewy. We're not really looking at 22.22. We're looking at the current range, and that's what we got so far. Then obviously, if you want to do obvious levels, you have a level here, 54.19, because that is the high of this range. And then you have the low of this range from earlier, which is 35.59. But because we made a new little range, it's not going to make too much sense. But earlier, this would be your levels. Make it purple, because purple are my levels, yellow are my price target. You can see earlier this was the range 54 to 35, but now it doesn't make too much sense because we have this new range here, which is why I'm only really focusing on 45.70, and then of course 42.35 for the downside. Next up we have Dash. So Dash, this is a range play. We're not really in a new range. We have you can see here 56.67 as our low. And then our top is this candle. It's not going to be this one because this is a good level to play for break to the upside. It won't be just the initial downtrend candle. It's going to be always like the retest of the level, which is now 81.44. That is the new level we're going to be playing. And we do have a short-term range here. You can see that we have a gap down, which is good for puts. For calls, ideally you're not really looking to play calls until we break to the 81 area. So don't look for calls right now. But for puts, we have a perfect play here. You can see that we've really gone close to this level right here at 71.74. So let's put it there, 71.74. And then your price target is obviously the next candle down, which would be 67.68. So you have a really good play for puts on Dash here. You can actually get, this is current charts. These are, July 24th. So these are for Monday opening. So you can actually play this. This can be a good level to play under 71.74. And you can see that we had a huge rejection to the downside. This is a huge bearish engulfing candle. So we could actually have another candle down, which could break under 71.74 and get to the 68 level, which we have right here at 67.68. So these are how I draw my levels, Not every chart's going to have thousands of levels like my SPY and QQQ charts. This is just one level to play to the downside. And then for now, the upside is we're still waiting for 81.44. And then we should probably go to the top for a swing price target. It would probably be the top before we go back to all the way here, which is where 95.50. So this is like my ideal swing price target scale. I think we'll break. Once we break past this level, we're probably going to break these candles as well. It's not always guaranteed. We could also have a short-term resistance here on this wick, 89.73. So it's good to draw them out anyways, just for precaution. But yeah, these are like our two scale targets for a swing here on Dash. Next up is IBM. IBM, I'm going to explain inside bars. So lots of you guys are wondering what inside bars are. They're basically a bar that's inside the mother candle. So here's the high. See how this high is higher than this high, and this low is lower than this low, which is why this is the mother candle and this is an inside bar, because the high and low are not higher and not lower than the previous candle. Now, I don't always like to play inside bars when the range is too small. And what I mean by that is, you can see here at the high is 128.81 and this high is 128.32. For inside bars, I'm going to do this really fast, just assume these are the right levels. For inside bars, you play the high and low of the inside bar, and your price target is the low and high of the mother candle, which is the red candle right here. So this is basically the levels. Just assume that this is the high and low, and this is the high and low. And that this yellow line is purple, and then the top, of course, are the price targets. You can see that there's not too much room for this candle to move based on the inside bar. So this is a play that's an inside bar that I would not play on the watch list. But this is an example, and I'm showing you that these are the levels, but this is not something I would like to play because the range is too small. However, we go to Coca-Cola, we have an inside bar. Now you see here that we have lots of more range to the downside, and we almost have pretty much a double top here. So we can perfectly play levels to the upside. So 61.88 would be my call level, and my put level would obviously be the low of the inside bar, 61.32, and you have a 60-cent range to the downside, which is perfect for Coca-Cola. The contracts are cheap. A 60-cent move will get you more than 30-40% easily. So this is how the chart would look. There's no price target to the call side because this is pretty much a double top, but you can easily play calls here. You can probably get to 62.58 in a couple days, or maybe even the next day once it breaks 61.88. So this is an inside bar that I would play. Calls above 61.88, puts below 61.32. But IBM would not play it because the range is too small. Next up, we have Shopify. Shopify, you guys can see it. It's a range. Let's see right here, 29.72 is your bottom of the range, and then the top of the range, again, it's not the initial wick, it's the retest, which is 41.37. And ideally, that's about it, really. I don't see why we put... You can also put a level maybe in the middle. You can see that we have a little pivot here at 34.83. But it's not too clear. I really just wouldn't play Shopify, honestly. Just wait till it goes retest 41 or back down to 29. This is just the middle range. It's just the middle line pretty much, like the median and stuff like that. So that's really it. I mean, it's pretty simple for Shopify. You have the high of the range and the low of the range. There's no really short-term play here. We kind of already going to the downside here. There's not really much to play. You could put a level here, a short-term level, because we can see that we have a pivot to the upside and we reject at 36.75, and then here the low is 36.77. So we have a short-term level here, which is respecting. So we may bounce. But other than that, there's nothing really clear besides the high and low of the range. So that's about it. Next up is Twitter. Now, Twitter, it's not a range play. Well, actually, it is kind of a range play. You can put the high because we retest and we fail. So you can do 41.29. So yeah, that will be your high of the range. Then your low of the range is, of course, the low, which is 32.52. But I'm looking over here. We have a short-term range. We have puts under 38.50. And we have calls above 40.50. This is our short-term range, so this is what I would play. Your price target will be the low of the next candle, which is 37.34. And your high will actually be the top of the range. Your call price target will be the top of the range at 41.29. So that's ideally what I was looking at Twitter. We don't have too much of a range here. You also have a level here because this is a pivot to the upside, 35.40. So these are your levels for Twitter. The price targets, they're not like actual levels. It's just your current level to scale and stuff. You can see that this level doesn't make too much sense as we keep going back and above. But the purple levels are actual levels that are really respected. You can see here that we respect here, and we haven't tested it here on the next opportunity yet. Lastly, we have Zoom. Now, Zoom is kind of a range. It's not too clear of a range, but I still want to chart it out for you guys because not everything's going to look pretty, obviously. Not everything's going to look like Shopify. Shopify has a really clear range. You have the high, you have the low. But Zoom, there still is a range. We might make a new range here, but for now it hasn't been made. So just do what we have. We have 79.03. And the top of the range is, again, not the initial. It's the retest, which is 127.37. So this is our current range. And really, there's no other levels to play, like, as of now for calls or puts. You also have a level here because we bounce. You know, levels are all about playing bounces and rejection. So we have, what, 94.51 as a level, which is actually a really strong level. You can see here that we almost tested it. We tested 96.1. So this is the current levels I have. And that's really about it. Actually, you can also see here that we reject here and we also reject here. And we pretty much rejected here and here. But this is going to be the level to play. 116.90 is another level that could be good rejection. You can see that we rejected pretty much gone below. We rejected here. We rejected here. We finally broke out. And then we've been bouncing a bit. And then it almost... It's not always going to be to the cent, obviously, but you can see that we test this level and we go to the downside. And, you know, here, these three candles were bouncing, and then it finally rejected. So that's just another good level to play. And you can see on the you know, when you zoom out, you can see that these levels make sense. You can see how 116.90, you know, it's bouncing up and down. You know, they're not going to be perfect to the cent, which is, you know, why you have to have key levels, which is why I wouldn't play Zoom right now. But you can see that 116, like 90, basically 117 flat is a good level to play, because we're bouncing up and down. And that's really how I draw my levels. So I hope you guys enjoyed this video. I hope you guys took some notes or something just to understand how to make these levels. You know, high and low of the ranges is really the main thing. And of course, we're always going to have short-term ranges like Twitter and stuff where you can do calls and put levels. So I hope this was easy for you guys to understand. Please leave some comments and feedback. I'm going to respond to every single comment. And I hope you guys enjoyed this video, and thank you for watching.